Hi, this is Frida Liu, and you're watching The Shift Asia. Trirec is a clean tech investment holding company focusing on global opportunities in the areas of renewable energy, clean technology, and sustainability. And they aim to identify suitable equity investment opportunities in early and growth stage companies, which can potentially provide both significant long-term upside return performance while achieving sustainable and positive impact to the environment. I'm here with Andrew Wong, director at Trirec. Hi, Andrew. How's the weather in Singapore?
Hey Frida, thanks for having me on here. Hot as always, I have to say.
Same here. Now, when we talk about Trirec, right, what are the expectations for clean energy investments, especially with COP29 on the horizon?
Yeah, I think clean energy has been at the core of what we've been doing since 2015 when the fund was founded, right? And we recognize that it is the backbone of this whole decarbonization journey that we are going through globally. And as for the rest of the year, I think the forecast is still pretty upbeat. I would say overall,
Right.
there's still going to be an uptick year over year in terms of investments. I think the latest projection by the IEA, International Energy Agency, is that investments will probably end about $2 trillion US. For 2024, so that is still a significant jump from last year. But I think another interesting stat is that $2 trillion is actually 2x of the investment dollars that are going into fossil fuels. So I think that shift in terms of less of a focus on fossil fuels and more of a focus on clean energy going forward is here, and it's going very strong. So yeah, very very excited about that. But I think at least from our own opinion. Being VC investors, is that I think on the ground for the early stage companies that we do invest in, I think the environment is still a bit tough.
Right.
Just a bit of context is that the whole VC industry now is sort of going through a downturn. So there's going to be, or there is, has been, I guess, realignment in terms of valuations and expectations in terms of startups and investors. So I think that will still last probably until the end of this year. But I think going into next year, we'll definitely, hopefully, we'll see the starting of a turnaround here for I guess the early stage investments where Trirec is invested in, right? So. And in terms of the specific subsectors that we are looking in, right, when it comes to clean energy, so I think from production, from efficiency to storage, all across the board is we're happy to take a look at. We have looked at historically as well. So I mean, yeah, we're open to that, and at the same time, we definitely do see challenges as well to the growth of this subsegment, right? Whether it's in the form of very high interest rates at this point in time, right? I think the U.S. rate is about 5.5 percentage points. Uncertain regulation. I think the big elephant in the room now is the U.S. elections, right? Whether or not Trump's going to get elected, and if he does get elected, what does that mean for existing policy? Most prominent being the IRA, right, the Inflation Reduction Act. So it'll be interesting to see how that plays out. And also, I think another, I guess, pressure or lever that's being put on in terms of increasing clean energy demand as well is also just the increase of AI, right? The increased computing power that is required to power these computations and calculations and algorithms, right? So increase in data center demand and energy to power that whole ecosystem there. So it is interesting times for clean energy.
Right.
And go ahead.
No, it's going to be interesting to see what happens when when the U.S. elections come about.
Yeah, absolutely. I mean, I think at least from my own point of view, right? I mean, a lot of these policies do help spur the creation and I guess enlargement of industries within the U.S., right? I mean, I think Trump's whole platform back in 2016 was that he wants to make America great again, which means bringing back industry, whether it's manufacturing, production of energy or other technology. So I think a lot of these deployments and developments are still in these Republican states that do back Trump. So I don't see a significant rollback happening, but there's still the possibility of certain things being, I guess, stymied in terms of progress.
Right. And what emerging technologies in the climate tech 2.0 space should investors start focusing on more, especially in Asia Pacific and Southeast Asia?
Yeah. Good question. I mean, everything. Can I
Okay.
say that? But I mean, no, because I mean, I say that half jokingly, but I think everything does need to be focused on, right? But obviously, there are priorities.
Mm,
I think maybe speaking more from the angle of Southeast Asia, right?
mm,
I wouldn't even say climate tech 2.0 or clean tech 2.0 type of technologies should be the focus right now
mm,
because at this point in time, I think the region is trying to balance that development along with decarbonization. So what that means is, can they just focus and put all their money into, I don't know, hydrogen production, for
right.
example? Probably not. They're going to be focused on building that foundation that's going to support their decarbonization journey and also their development journey as well. So what I mean by that is probably more from your basic type of technology when it comes to energy. So your renewables in the form
Mm,
of solar, in the form of wind, and also electrification as well, right? In terms of transportation, the biggest I think mode of transportation here in Southeast Asia is is two-wheelers. So
right.
the electrification of that is going to be huge as well.
Right.
So we're excited to see that, and also I think from the probably the non-energy side of things as well that's super important here would be agriculture too, right?
Right.
How do I get fertilizer that would help a lot of these smallholder farmers not have to pay very high prices if there is another conflict that ends up spiking prices,
Mm,
right? So it's all intertwined, but I think definitely the priority is going to be development,
mm,
and at the same time while we're focusing on these type of, I guess, climate technologies, we can't forget about what's already existing, right? So a lot of these areas are still using coal, and I
mm,
don't think there's anything wrong with that. But at the same time, you're going to need to find a solution in order to reduce the amount of emissions coming from there. So potential technologies that can be explored, that's maybe more in that climate 2.0 segment would be carbon capture,
right.
point source carbon capture, and how efficient it's going to be. If it's going to help create new revenue streams, right,
Right.
by the creation of carbon credits as well. So definitely quite a few avenues, I would say. So I mean, overall, yeah, everything, but at the same time, just trying to focus more on that foundational layer
Right.
of climate technology, and then just moving on towards what I guess you would call climate 2.0 type of technologies, the additional layers on top of that.
Right. And in each country is so specific. Each area is so different as well, right? In terms of what they need. You talk about two-wheelers. I just had a conversation earlier with this lady who's coming up with electric engines for the fishing coastal community, right? So I mean, it's all kind of depending on where you're from and what the needs are. Why are peripheral technologies often referred to as climate tech 2.0 crucial in the roadmap for clean energy transition? Can you share some examples or stories?
Yeah, for sure. So I think maybe it's just a good idea to run through how we view this space and how we look at it and how it's evolving, right? Because I think we've been in this space since 2015, but this whole climate tech, clean tech space has been around for more than a decade now, 15 years, more than that. Starting from the late 2000s. So I think at that point in time, the world was sort of going through what Southeast Asia is going through now in terms of developing renewables, in terms of developing electrification of transportation as well, or biofuels as well, right? So that was sort of the base for us, that 1.0 era. And then moving on from that, gradually you start to develop, the adjacent industries or the peripheral industries, right, that are related to that foundation layer. So whether it's in the form of battery storage, or it could be charging stations, or it could be, different materials used in, solar cell production as well, is something that, we saw as we evolved, right, with this space. And then I think now, what people are coining, climate tech 2.0
Mm,
is really just a reflection of the current climate and the goal of having net zero being achieved. And what that means, right? And, going on with my previous answer is that everything needs to be decarbonized.
right.
And what does that mean? That means not only targeting the electron side of things, but the
Mm,
molecules, the proteins, and so on and so forth. So it's really going to be a team effort in terms of what we're targeting, and for example, whether it's hydrogen production, ammonia production for fertilizers, or it's green steel and less emission intensive cement for
Right.
concrete that's going to be used in building, right? I mean, this whole region is going through a very rapid growth period, so
Mm.
that construction is going to play a big part in that as well. So how do I source material that's going to be just as effective, but at the same time less carbon intensive? So I mean, yeah, in terms of importance and what type of technology is going to be, I guess, priority for clean tech or climate tech 2.0 is definitely a whole range of stuff, I would say.
Right, right. And I guess in what ways do VCs and private funding contribute to scaling up technologies to support the renewable energy transition?
Yeah, I mean, good question. I mean, obviously the capital side of things, I think
Yeah.
that's the main contribution here. But at the same time, I think the VCs that have been around have shown that they're not only capable of providing capital, but a lot of those value added options that startups very much appreciate.
Mm.
So whether it's in the form of business development by introducing corporates to them, or other people that could use their solutions, is something that I think a lot of our startups do appreciate and value. And at the same time, for startups that are not in this region, for example, that we've invested in North America or Europe, they're looking for an entryway into Southeast Asia or Asia at large. So how do we help them navigate the regulation over here,
Right.
the setup of businesses, and also what I mentioned before in terms of business development as well, is something that they really appreciate too. So I think aside from those things, the more I guess you could even say the more the cliched value add as well in terms of strategic direction, operational side of things, right? And I think for us, since we've been in the space for so long now, since 2015, is that we do have a good lay of the land in terms of who the major players out there, and also from a, I guess, company building perspective as well. What are best practices that have been done, and what are some maybe the pitfalls that you should avoid as well going forward.
Right. And what are some of the key challenges facing clean energy investments today, and how can this be addressed?
Yeah, I mean, there's definitely a lot.
Mm,
I
mm.
mean, things like regulation, for example, or technology, or access to capital, infrastructure as well. Because if we're focusing mainly on clean energy, these are very significant. So I guess from the regulatory point of view, right, things can shift.
Mm.
As we mentioned before with elections, right? What does this mean for current policy, future policy? And is this something that the startup can work with in terms of dealing with variables? And
Mm.
does that play into their plans for expansion and growth? Right. So it's definitely something that's super important, and can be a big factor in I guess the whole industry's success and progress. And yeah, I think also access to capital now. I think for the longest time, right, there's always been calls for easier avenues of capital, not just
Right.
in form of equity investments, but debt financing, right?
Right.
Because a lot of these projects involve big capital outlays, right?
Yeah.
So that's something that a company would probably not fund via equity, because it's going to dilute everybody's holdings. So how do I get loans to help support
Mm.
this construction, right? And at the same time, how do I get non-dilutive funding as well? Not just in the form of debt, but also in the form of subsidies, whether they're financial or if they're tax incentives as well, is something that I think people have been asking for, that the governments around the world can contribute more to, right? Because I think once you get over that initial hump, then I
Yeah.
think it really creates this virtuous cycle where more capital is going to flow into that industry, and which is going to just attract more people to come in and decrease that cost curve, and overall make it more accessible in terms of the solution
Right.
out there. And at the same time, also, I think from the infrastructure perspective as well, right? If we're talking about energy, that often involves the grid.
Mm.
So those energy distribution components that come into play, whether it's your power lines, whether it's your transformers, or your switches that help bring the electrons that are being produced at a certain site into the people that will be using or consuming this type of energy. So I mean, it's just a whole slew of things, and it's not something that's going to be easily overcome
Right.
because there are a lot of I guess there is a lot of inertia with this. But I think if we can convince a lot of these players to do each of what they need to do in their silos as well, but also from a cooperative point of view as well, I think that's going to be super helpful for clean energy investments.
Right. Three of your portfolio companies are namely Econa Power, Expansive, and FreeWire Technologies have been featured in the Clean Tech Group 100 report. Can you talk a little bit about them, what they do? I think it's kind of interesting so people kind of understand the kind of companies you're looking at.
Yeah, so I mean, I think for us, just to give I guess a bit more context, right? Trirec is really I guess an overall decarbonization investor. So we're agnostic to in terms of where the emissions come from, right? Whether it's the energy sector, infrastructure, transportation, buildings, or agriculture. So we're agnostic to what type of technology that is, whether it's purely software or hardware as well. So for the ones that you have mentioned, right, I think number one, Econa Power, they're in the hydrogen space, and what they're doing is they're not really in the green space in terms of green hydrogen, right? I think you've maybe have heard of all the different shades of
Mm,
hydrogen that are being worked on right now, whether it's blue,
green
green,
or
so on and so forth. So I mean, for them, there's more in that turquoise space
mm,
because they still use natural gas in their production process, but instead of emitting gaseous CO2, they're producing carbon black. So what carbon black is can be used in things like tire production.
right,
So it is an input that does have value,
right.
and it's sort of something that is, I would say, a transition that
Mm,
is very viable before we hit green hydrogen, where prices are become a bit more attractive to everybody there. So that's Econa Power. They're based out of Canada. It's currently doing very well, working on a few projects. And then the second one you mentioned, Expansive.
mm,
So Expansive is a ESG commodity exchange, and so like any other exchange, right? It's a place where people can buy and sell whatever they're buying or selling.
right.
But in this case, it's ESG commodities, so that encompasses things like carbon credits or renewable energy certificates as well. And it's a place for price discovery. So if I take the example of carbon credits, right? I mean, there's been quite a talk about this space over the past few years, in terms of okay, if there's a project here and there's carbon credits coming through this project, how do I price this? What is it worth? So instead of just leaving it up into just a direct bilateral negotiation, you leave it up to the market participants. What's going to be the bid ask for that? So you're going to be able to come to a more efficient way of determining what the price is for a carbon credit or a renewable energy certificate as well. And Expensive is the largest one in the world currently, in terms of carbon credits that are traded in the voluntary market. I think they about 80 to 90% of the volume goes through them. So they are a big player there, and a significant player that will help facilitate the road to net zero. And then finally, FreeWire. They are in the space of EV charging, but
Right,
more specifically DC fast charging, right? Because I think
right.
charging is separated into slow charges and fast charge. But for FreeWire, it's that fast charging, reducing that time that is spent being idle and sort of refueling with electricity. And their solution is innovative in the fact that it is taking away the requirements. For surrounding infrastructure upgrades, because oftentimes with DC fast charging, it's the grid infrastructure that needs to be upgraded in order to support the amount of electricity at certain standards, right? So for these guys, they're sort of taking that problem, and the solution is that they're putting batteries into their charging
Right,
equipment. So in that sense, you don't need to upgrade the surrounding grid infrastructure because you're able to slow charge the batteries,
right.
which then is able to output that energy at whatever power output requirements that is required for fast charging for vehicles. So that's sort of all those three in sort of a quick nutshell. But
Right.
yeah, I think they're all representative of all the different avenues that
Yeah.
is required to move this decarbonization mission forward.
Right, and it's so interesting because when you talk about them, they're so different, and yet it sort of fits into the ecosystem, so to speak, right? It's not just the technology, but everything else that sort of fits into it. And I guess just like a final question, when you look at these companies to invest in or to look at, it's sort of you. What are you looking at? You're looking at how it fits into the bigger picture. What is it apart from your returns? But what else are you looking at?
Yeah, good question. I mean, but yeah, maybe just to reiterate the point, right? I mean, we are first and foremost a financially focused
Mm,
investor, right? So I mean,
yeah.
um, what we are offering is the same or better returns than what the market standard is. So in our case, right, it's 25% IRR
Mm,
in terms of that's in line with the rest of the venture community in terms of investment targets. But at the same time, yes, we are looking at what is the impacts of these investments that they can have on emissions, right?
right.
Whether it's the new emissions that are coming out, or whether it's in the form of taking out the existing stock of CO2 that's already in the atmosphere. So yeah, we tend to look at that, and at the same time, right, when we are evaluating these companies, I think a lot of these are dealing with industrial type of solutions. So I think really seeing who are the first backers of these solutions, because
Mm,
I think that first customer is super important, right? I mean, they're
right.
going to be the ones that is willing to take the risk and not only try out your solution from a tech perspective to see if it works,
Mm,
but also being the first person to pay for your solution as well. So I think if you're able to get these two done with the first customer
right.
and really have them on your side, it's going to speak volumes to the outside market, whether it's future customers or future investors, that hey, there is a viable solution here, and that these that first customer is going to be your champion in the market. So I think that's something that we're always glad to see in startups, that they do have a really solid backer in terms of the commercial side of things.
Mm,
But then yeah, also the other I guess aspects as well, right? I mean, strong founding team is something that we always are looking for, right? That founder market fit, right? Do they have the traits that are, I guess, more common among successful entrepreneurs, as well as market size, and a few are the other, I guess, more common areas that VCs look at as well.
all right. Thank you so much for your time and explaining this to me. Of course, I've been speaking to Andrew Wong from Trirec, and you've been watching The Shift Asia.